Give you a little bit more detail about myself. As Ken mentioned, I have held various positions within the Canada Revenue Agency, but I started out in collections, quickly made my way into small medium enterprise audit, doing income tax, GST, generalist audits, and then found my home in excise duty um, in, I think it was 2003, which, I was actually brought in to conduct excise tax reviews on wineries and brought them over to the Excise Act 2001, which was a production levy on wines. So it was actually kind of a major feat to bring a difference of taxation to a commodity. So within that excise duty, I basically have worked as officer, technical advisor, team leader, and Pacific Regional Manager. So I have a vast experience in all positions there, so I kind of know the workload and how things operate there. Additionally, I did work for Ottawa after my managing stint, basically developing the training for new managers as well as officers, and I did also nationally train the excise officers in the commodity courses. So in that regard, I have tons of experience in training as well as conducting audits themselves. Specifically to note, which is kind of interesting, is that the province is a licensee to the federal government, and so with that, they basically um, are subject to audit. So I am very well versed in the provincial procedures and operations, and I do have quite a bit of knowledge and as to what they do. So really, like Ken was saying, I've now been left the government and I'm working, for myself and with a couple associates. And for the last 10 months, we've been working with the breweries and the beer industry, and we've been specializing specifically in the LDB audits and assessments, and we've been successful in terms of making argument and making reduction to these assessments, and also like Ken had stated earlier at the beginning of this the seminar, we basically have advocated to have a review of the audit process. Specifically, we're trying to, have them give rationale for need to review water usage or to conduct any type of indirect testing when there is reliable record. And in addition, we're also looking to see whether they can potentially, make considerations on the retail markups, because those are the more punitive when it comes down to assessments. So I think, the fact that we have correspondence and there is things going on, we are making great headway, and there is, positive change. So that kind of leads us now, I guess, to what we're doing today. So today I'll be making a presentation on how to survive an audit, or specifically LDB audit as well. But generally, like the rationale behind this is you can survive any type of audit as long as you're knowledgeable or you're basically prepared. The best way to be, on an audit defense is to have a great offense, is to know what the objectives of the audit are, and then have the proper audit trail that will support what's going on. So I'll be going through and I'll be sharing my screen here, but I'll be going through a PowerPoint presentation, basically to give you a brief understanding. I believe, it'll be about 25 minutes, and then we'll have a question and answer period at the end. So, please, by all means, ask any questions. And if I know the answer, I'll give it. And if I don't, I will find that answer for you. So I am just going to put this forward. So how to survive an audit. So basically, short question or short answer to that is hire me. Just kidding. Basically, like I said before, the best way to survive an audit is to have that knowledge and be prepared. So what I'm going to go through is kind of give you that knowledge in terms of, what is the regulatory environment. I'll kind of speak about what their change in approaches are in terms of audit and audit selection, and then my personal experience, when I was within the government. I'll also go into the understanding of the audit process, specifically, to tell you what the different steps are within the process, and then go into a little detail as to how the excise duty audits work and how the LDB audits work. And then we'll round it off with 5 most common audit issues. We'll kind of identify the issues that have come across in my experience, and kind of help you or lead you as to what you need for them. And then we'll go into a question and answering period at the end. So in regards to the current regulatory environment, both the federal and provincial governments are tightening up their audit approach and audit selection. And I can actually, personally tell you that, from experience, the fact is they're using these post-audit approaches to review people's production. Before, back in the day, the excise officer actually was on site and witnessed the packaging and whatnot, and then signed off on a ledger, and then there was determination of duties. Nowadays, those resources aren't there, so really what it is it's a post-audit approach or post-audit review. And in the event that there are missing or incomplete documentation, they are now doing what we call indirect testing, and then making projection-based assessments. So that is something that's kind of new within this industry, because it wasn't so much applied before, but that is kind of the way they're going. In addition, they are using filings and submissions and looking for errors in terms of assessing risk, and then from there, you're more likely to be chosen for audit if you're at a higher risk. Also, there's collaboration amongst regulatory bodies in the process of creating memos of understanding, which allows them to share information. I can personally tell you that I've attended these meetings where we have intergovernmental meetings with the Ministry of Agriculture, LDB, LCRB, CFIA, WorkSafe BC, all these different government bodies in the same room talking about the industry and sharing information that they can. So this is how, unfortunately or fortunately, however you want to look at it, how the industry is run or policed. So they have sophisticated systems to flag manufacturers for audit based on the yearly submissions. Like I said before, for selection of audit approach, they are typically using what's filed, and if there's errors made, then you're higher risk for audit. And kind of what Ken was saying before, some of these guys or breweries are actually getting into a situation where there is a massive assessment on their business, and it's definitely impacted them. And unfortunately, in some cases, it's put them out of business. So it's important to understand, what's going on in the current regulatory environment, because to have that knowledge, you then can tailor your approach or tailor your systems to it to be compliant. So basically, going into understanding the audit process, this is basically just in general about an audit process, and this process is kind of throughout any type of audit, whether it's a financial audit on income tax or GST, or whether it's a production based audit. But generally you have these steps, and you have an audit scope, which is the determination of a range of activities for a period of time. So really what it is do they want to conduct a full scope review where they're reviewing all your systems, and that being production and accounting, or are they doing a limited review scope where they're looking at one particular thing, and then what they'll do is they'll use all these limited reviews and compile them together to conduct a full scope review. Objectives, basically that's what they are. It's kind of the goal of the audit. When you're looking at excise duty, their objective is ensuring compliance to the Excise Act 2001 when you're dealing with, or Excise Act, sorry. And when you're dealing with the BC LDB sales agreement compliance audits, their objective is ensuring compliance to the BC LDB sales agreement. When it comes down to review of process, it's just that. Really what it is they're going to review all your production and accounting process, and they're evaluating the internal control or evaluating any type of risk from there. And so from that evaluation, they then would set their risk and sample size, and then from there they would then look at the examination of documentation. And again, while they're looking through the examination of documentation, basically they're assessing your risk. If there's missing information or gaps, then they're increasing the risk and therefore potentially increasing the sample size and reviewing more. So, generally how an audit works is, they don't have capacity to review everything, so they would pick a small sample of things, and within that sample, if they were finding errors, they would then either extrapolate that error in a projection, or they would expand the sample and look for more errors. So from that, basically, they are using these steps and these processes to evaluate your risk, and from that risk determines how much work or effort or scrutiny that they're putting into the review. So in regards to excise duty audits, I'll start there first. So it's a little bit, simpler. In regards to excise duty audits, you're basically ensuring compliance with the Excise Act. And really what that is you're ensuring that the proper excise duties are remitted on, and those are calculated based on the daily round down. But also part of the excise duty audits is you're ensuring compliance to the regulations. So there is basically requirement that you have your weigh scales or flow meters or vessels gauged or calibrated. I'll tell you, from my experience, it's generally administratively a 2-year process. So if you have these things calibrated every 2 years, the control is reliable and the accuracy to the records would be reliable, because you have proper calibration on instruments that are using to basically report or account for figures within excise. So the way the excise duty audit is basically it's a production and compliance review. They're reviewing production because duty is payable upon the packaging of the beer product, and then it's summed in the day and rounded down. So they're reviewing basically all your raw materials, and then looking at your batch production and ensuring that all the package reports and everything equate to what you're reporting on the K50 return. They're also ensuring that, because federally with craft breweries, you pay an applicable tiered rate of duty based on where you're sitting in your cumulative limit for tiering. So they're ensuring that you're paying the proper rate of duty and your production is as declared properly, and then they're ensuring that the instruments and everything that you're using to compile this information has been calibrated in a timely manner and is accurate. Along with the audits is something to kind of be aware of is they're also conducting physical inventory counts, and these inventory counts are basically to benchmark for the audit. So what they're doing is you're basically looking at, we had a starting figure, we have production, we've got removals, and then here is where we're sitting today in terms of physical inventory, and is that perpetual amount that's been calculated equal to the physical amount, and if there's a variance, explain it, type of deal. That is the gist of the audit review for excise. In regards to the BC LDB audits, basically, as I've mentioned before, their objective is basically to ensure compliance with the BC LDB sales agreement. They're ensuring that all the sales reported are complete, and they're basically asking that you file submissions for packaged inventory and movement and disposal and whatnot, and that would be your product movement summary reports and your annual worldwide production summaries. So within the BCLDB audit, something to note is they're looking more at the sales portion of things versus the CRA excise duty is on the production side of things. However, both programs kind of look at both each other type of deal, because one is kind of in hand to the other. You cannot produce and sell it versus you couldn't sell it if you produced it. So the audit trail they want to basically have is that everything lines up to each other, production and sale and physical inventory. So going into the BC LDB audit process, basically what it is, and I know some of you have already been through this, is they will define an audit period, and then you'll start and have a started audit period where they'll look and determine what the starting inventory of packaged product is. They then review your production in terms of going through raw materials, brew sheets, and packaging. That's basically to determine what was available to be sold. And then they review all export documentation, anything that's kind of left outside the province. And that's one thing to note is export for federal is leaving the country, but export for provincial is leaving the province. So know your terminology on that. So they're basically reviewing and verifying whether it's left the province or not, and they're looking at a cumulative of documentation. It's not just a sales invoice. They're also going to want to look at bill of ladings. If it's fully left the country, there's commercial invoice, there's landing certificates, there's brokerage documents, there's a bunch of different documents to support that product has actually left the province. That's really what they're looking for. And so what that equates to is then if you're starting inventory plus your production or availability of packaged goods minus everything that's kind of left the province equals your total available product for available for sale during that audit period, which that in itself should make up three different things, which is product sold, product destroyed, and your ending inventory. And so from there, you basically want to ensure that you have proper audit trail to support all your products that are sold, all your product that's destroyed, and any type of physical inventory count, which generally, they would, the auditors themselves would conduct count or at least oversee a count. So I kind of want to go over a little bit of the difference between the two, between CRA audit and LDB audit. In regards to CRA audit, it's a reconciliation of raw material that they're conducting. So, they'll ask for all your malt invoices, and generally they're more looking at your base malt. So they'll conduct a reconciliation of your base malt to ensure that all brews have been accounted for. They then flow through and verify that your packaging activities. There's a requirement to basically have disposition of packaged beer. So you do have to have an accountability as to where it goes. However, the relief of excise duty is upon the point of production when you're basically imposing the duty and paying it at that point. So it's just administrative. They want to know where it goes. However, you're paying on it at the time of packaging. Destruction verification. So in the event that you're claiming N10 credits for duty paid beer destruction, they would review destruction. So, I'm going to go a little bit into detail about this later, but really what it is you have to be aware of the different, programs destruction policy. When it comes to excise, basically there is a written request and written approval that should be made. And then from there, you can then proceed with the destruction. But within that request, you basically are outlining what type of destruction it is. So if it's an on-site destruction, you're basically outlining what procedures, controls, documentation you'll have to support that destruction, and then they'll basically sign off onto whether that's acceptable or not. And then in regards to third-party destructions where you're having the product destroyed somewhere else, that place has probably been vetted by excise, and that they'll ensure that a destruction certificate is in place. But also they may also ask for proof of payment for the invoice to that place as well, just to ensure that transaction occurred. Similarly, for exports, if you're basically claiming N10 credit for export, to basically claim that, but you do have to have the supporting documentation, and there is a period of time that you can claim those exports. One thing to note within the excise portion, CRA, there is a subsection 32.1 inventory count requirement that most breweries are not aware of. And what that is that for your fiscal year end, there is a requirement that you conduct inventory count on packaged goods, raw material, and your work in process. So what that is that kind of gives the auditor a benchmark figure every year. If they feel the reliability on that count is accurate, they don't have to go back further. They can work within their count and your count and basically do their sample within there. When it comes down to the objectives really with the CRAs, they're looking at, is there proper remittance of excise duty? So are the tiers being abided by? And then, is there proper calibration of the equipment and vessels, meaning, are the scales calibrated in a timely manner? Have the bright tanks been gauged? Has flow meters been gauged? And anything basically that's used to record an excisable amount should have some type of calibration behind it. In regards to the LDB audit, it's very similar when it comes down to it. They're really reviewing the majority of the same things, except that when it comes to raw materials, they're doing more of a review and not more of a reconciliation, because they're looking at the reasonableness of raw materials accountability going through for packaging, because obviously that then equates to what was available for sale. They are looking at exports out of Canada, but also other movement of packaged product, and then basically anything that's transferred out of province, because for them, basically markup is only subject to things that are sold in BC. Within that audit process, they're also going to be, finding out or conducting opening and closing inventory counts. So, one thing that other people aren't aware, but there is a requirement under the sales agreement that an inventory count is conducted on the BC LDB fiscal year end. And, so that's where, they may start their audit period at that point, because they have what they would consider a reliable count, but it's not always that way. They may start their audit period at a different point, but then they'll ask you to supply an opening packaged goods inventory count. So it's imperative that your record keeping is accurate, because in the event that you submit something that has an error, that could equate to a potential liability because of the fact that you have a variance. So going into the 5 common audit issues, basically the first one we're going to talk about, internal control. So the fact is that the majority of these breweries, of the craft breweries, are small to medium-sized business, and there's little to non-existent internal control, because there really isn't that many people to have that division of duties and reconciliation. So when reviewed, basically, the auditor or officer will be assessing within that review process what type of internal control is there, what type of reconciliations, what is the reliability of the records that they're giving me. From there, they're basically assessing that risk, and higher risk means higher scrutiny. So basically having systems in place that give them assurance that there's reliability and there's control gives them not much ammo to further expand their samples and their review. Second issue would be raw materials management. Really, like I said before, a lot of these programs are basically looking through and reconciling for your raw materials. So when it comes down to it, they're going to make sure that you're accountable for everything. And a lot of people, unfortunately, kind of go with recipe amounts in terms of when they're making accounting and withdrawal. The unfortunate portion is that if it's, you've used more than the recipe amount, over time, that's going to create a variance. And then when they're doing reconciliation, that variance, they may say, well, if there's poor control or reliability, they may say, well, basically, we're not accepting this, and there's a brew that's missing. So that's why it's imperative that you have the controls, you have things in place, and you have everything there to be accountable, because any type of missing information or variance, they may lead them to believe that there's something else going on. Additionally, it's the same thing with the packaged goods inventory. When it comes down to that, specifically with the LDB, if they're doing an analysis of your packaged goods and they find a variance, they're going to assess you on that. And unfortunately, some of that stuff can be explainable have you have proper control and record keeping in place. So in regards to supporting documentation, like I said before, this is a big thing. Some people feel like one document could suffice for for requirement, but that's really not the case. Specifically, like I said before, in terms of destructions, when it comes down to destructions, there's approvals and everything in place, but then, with the CRA, they're obviously looking for, the certificate of destruction, or they're looking at the quality assurance report along with the request for destruction and 2 sign-offs and blind counts and whatnot to determine them. Having that in there, giving them that information that they're looking for and the control over it, basically will support that. And for destructions, that's a big thing. And like I said before, with exports, people need to be aware that it's accumulation of document. It's not one particular document. So, yes, you show a sales invoice to a company that's out of province or out of town. However, that's not suffice enough. You still have to support it with, a bill of lading, any type of brokerage fee, commercial invoice, landing certificate. Some countries require municipal documentation when they're receiving a beer product. So it's that accumulation of all those documents that would support those export transactions, and that's what they're looking at, not just one thing. And additionally, or last but not least, is promotion. So one thing is people aren't, unfortunately, accounting for the promotions and reporting them correctly. So what ends up happening is those fall within the variance of packaged goods inventory, and then they're being assessed on, I guess really what it is, even if you're giving out that beer, you want to report it and pay the markups on it. Because, when it comes down to it, if you're found to have a variance, the LDB will proceed with an assessment on it. So I know that's fairly quick, and it's kind of the crash course in auditing. I've been doing it for 20 years, so I apologize if I'm, glancing over or going over quickly, but I think, that's why we have the question and answer period. And like I said before, if I know the answer, I'm going to answer it. And if I don't know the answer, I'll let you know that, and I will find the answer for you. So I guess we'll move it over to questions.
Yeah, I think Don's going to come in too. So we'll just see if he's going to pop up in a sec, because he was moderating the questions.
Hey, Don.
Hey, everyone.
Hey, there he is.
I'm just getting the last couple of questions here.
Okay.
Starting to fly in.
Yeah. That's why we ask you to do it before, not at the end, but that's okay.
What's the number one thing breweries get fined for or get in trouble for? That's just recently came in.
So it's variance. It's basically the fact that they go through their LDB review, and the LDB says, hey, you produced this much, but you've only reported this much being sold. We've conducted counts and reconciliation, and really there's this missing amount of volume of packaged product. Where did it go? That's kind of what's going on in terms of some of the larger assessments. And what it is sometimes it's a breakdown from production to front of house. Sometimes it's a breakdown in their accounting system where there was errors, where accounting systems were holding things for a period of time, and that when they came back, they didn't know to basically migrate that data, and so they underreported with that. So there are system issues as well as control issues that are the reasons, particularly why people are getting to a variance, and those are resulting in large assessment, because it's accumulation of a variance over a multiple number of years. If it was 1 year, it's not so bad, but when you're being audited and they're going back 5 years, that variance can add up, and then that liability can be large because of how much it's added up.
There's been a couple questions about promotions. I thought we'd, what is a good process? Oh, sorry, regarding promotions, does it mean that we can give away beer? And should we be distinguished between tap room promotions, a pint of beer, and packaged product promotions, a can of beer?
It's a good question. I'll be honest with you, my associates are the experts when it comes down to the LDB promotion side of things. But generally the best practice has been you got to report it and pay on it type of deal, because there is no relief. The fact if you give it, you shouldn't, from my understanding, is you shouldn't be giving it away. So there should be an accountability to it and the proper markup paid on it.
I'll add to that. The LDB line is you cannot give away beer. It's in your sales agreement. It's illegal. You're not allowed to can't promote a free pint. You can't make an advertising for it. You cannot give customers beer. Your best business practice is to pay for it.
Yeah.
So if somebody gets a bad keg and you got to give them a new one, pay for it.
Yeah.
Do a Doc 60. Send them the new keg and pay and submit your Doc 60 for that new keg, and then take back the bad keg and do a destruction trail.
Destruction, correct. Yeah.
So a question wasn't asked, but I'll say when you do a Doc 55, the biggest misconception is you do a Doc 55 and you write down that it was spoiled beer. You assume that beer is now gone from your sales package, and it is not.
No.
It's put back into what you have available for sale. So you need to destroy that through a destruction company, or request destruction through the LDB and CRA, and then destroy it with a paper trail. Yeah. Otherwise, you go collect a foamy keg back from a customer, it just goes back into your 50 liters of available for sale, and you do that 100 times in a year, and you're in trouble.
And yeah, like that, what Don said, basically, that creates a variance, because here you are thinking, oh, you know what, I've done this, I've returned this product, it's no good, but they're looking at it like you've returned it, it's back to be available for sale, and until you actually account for it in the destruction, they're still thinking it was sold. So that's a great thing to bring up, Don. That's a very typical example of what's happening administratively, is that people are doing what they feel is right, but there's a missing gap there, and that gap is that we need to ensure that we're putting in a proper documentation to support those destructions, and then that's taking away from what was available for sale within the audit period.
Pretty specific question here from Maurizio. Our point of packaging is at the bright beer tank, because we serve directly to the tasting room. So there are variances between our excise submission and our sales due to the wastage at packaging. What sort of records do you recommend we keep?
Well, so, and this is the thing, is that when it comes down to it, for excise purposes, they're never going to match really to the provincial side. So when it comes down to it, the auditor should have that knowledge. They should really understand the difference between the federal and the provincial side. And I know that both guys ask for both sides of the documentation. So if you're a CRA auditor, you come in, you ask, hey, what did the province do? And when the province comes in, they'll say, hey, what did the federal guys do? So what it is, when you're paying upon bright tank, basically you're allowed to take away your standpipe, and that's your available. You round down, and then you're paying on that. For duty purposes, at that point, it's none of their concern, because you've now tapped the tank, you duty paid on it, and it's going, to consumer through draft. Provincially, I believe that you'll then have to have that accountability of what is within that tank week to week, I believe. I can talk to my associates with that one. And you basically just want to have your opening and closing inventories, and then have it kind of relate to what's been sold for draft. Obviously, they should be aware that there is line loss, and there's these things that are through it. So that's why it's pretty important, when you're going through that, when there's that review of process, they're generally asking or sitting down with you and doing an initial interview. Give them a lot of information, let them know, hey, I'm losing here to here, to give them that understanding that, yeah, there's this product that was there, but now through my process, through the way I conduct business, there's losses, and this is where the losses are. And then going from there, you kind of can support the way your business operates. And really their objective is it sold? Is there markup on it? Like, is it going to availability for sale? If the markup should be paid on it.
So there's a question just came in about rep samples being paid for through MOS. And I just wanted to go back quickly to the tasting room promo that was asked earlier. you don't differentiate per se between promoting a keg or a can. Your tasting room is considered another customer. It's the restaurant, so you can't promote kegs to your own tasting room. You sell them, but you never pay for them. Then you declare your volume based on what you sell through your tasting room. That's in your weekly submission. So any promo there is just like if you run a restaurant, you do your promo beer. That's completely separate. You have PST and GST on that, and that's all taken care of through your point of sale system in your tasting room when you promo a beer or buy a staff beer or through that. As far as rep samples, yes, they have to be paid. So if we do a large sample to a rep on the island, we send 10, 15 cases. We'll just run it through our inventory system and then submit a Doc 60 for that amount. So you pay the tax on your samples that your reps using. For our local reps, we use the easiest and safest way we find is do it through the tasting room. So we sell all that product to the tasting room, and then there's a weekly Doc 60 for the amount we've sold to the tasting room, and then any samples that the reps need, they go in and they purchase it from our tasting room, and it's manager promoted there at that point. So there's never any dollars, but it gets submitted through the MOS.
That's a good answer, Don.
Somebody said you mentioned PMS a few times. Can you explain why this is so important?
So yeah, that's a provincial form. That's the product movie summary report. Ken's mentioned this as well. Basically, what the product movie summary report is, it's an accumulation of everything. It's a summary of everything in terms of products that are produced, sold, inventories on hand. It's basically the summation of your operations, but it's done on the LDB fiscal year. Versus, and nobody's mentioned this, but there's an annual worldwide production summary and declaration where that's actually just showing production that's done on a calendar year. So that's something that people have to be aware of, is that you're making submissions that have different period. They're using that and making sure there's alignment to it, right? So that's a big thing, is be aware of, when you're making submissions, that you know what period you're making the submission for.
And I'd like to add that the schedule, the second one, the worldwide production was due, I believe they asked for it, and we sent this out, due February 1st. The other one goes on the fiscal, and then they compare the balance, and this is where the product movement difference, there's this retail multiplier, we like to say. Yeah. And if you've received that, and I know many of you have, if you look at the letter that we've just added, that's the letter that Blaine Lawson, from the head of the LDB, has said, do not pay any attention to it at this moment. So don't worry about that at this moment. We've got them to stop the expectation of you guys paying that back.
Yeah, that's
awesome.
It's
been asked a couple times on calibration of equipment. Is it our responsibility? Is it done with the government? And what's the best way to calibrate your scales and your flow?
So yeah, so on a federal standpoint, really what they should be doing is, at the time of licensing, they should be really big on informing you or educating you as to requirement on, calibration of your scales and gauging of your tank. Generally at that time of licensing, they, if you basically are calculating off a bright tank, even at, some guys, they package right out a fermenter. So there should be some type of determination as to gauging of that tank. So with bright tanks, obviously they'll, the officer may come in, or they may ask you to bring in a third party to come in and have them gauge that tank, and then they'll mark off the hectoliter on the sight line. But with fermenters, if they're packaging out of a fermenter and they're using a racking arm, and there's really like no filtration, they're using that racking arm to move and package from. And so really there is a bunch of loss that's, left at the end. You really want to basically be able to account for that loss and have an officer witness it. Because what that'll do is that will take away the availability from that tank, and you can round down from that. So meaning that, if they can calculate that, at the lowest point of the racking arm, you're going to lose 100 liters every time, well, they'll allow you to take 1 hectoliter off of that tank for availability. because in actuality, there's no way you can package that. So these are things that, you know, you really want to have it discussed with the excise officer if that's your process, because you want to have proper determination of losses, because if it's an accounted for loss, a determined loss, you can make that accountability for it. And if you have an excise officer that's actually witnessed it and signed off on it, then how can they tell you otherwise? But just know that there is unfortunately a requirement that at any point, any officer along the way can recalibrate or re-gauge things. So that's why it's important to kind of just keep that communication that you have, and anything that you do within your brewery premise with the excise guys, so that, you know, you don't get some new guy in there going, oh, when was this calibrated? Well, you know, this was calibrated at this time, and, you know, I had this officer come here and there's nothing that's changed since then. You know, that would mitigate those type of issues, but just know that they at any point have the right to get you to calibrate or gauge a tank. And then administratively, when it comes to scales, they're kind of allowing it for every 2 years. I know that trade kind of says, hey, you should do this every year, but it could be costly. So the CRA administratively says, hey, you know what, if you're calibrating your scale every 2 years, we're reasonable that your malt amounts or your weight amounts are accurate.
We got time for a couple more.
Yeah, we're going to go till, because this is important, but we're going to go another 3 minutes. I've seen this one a couple of times. Who, what person or department does the brewery contact provincially in order to destroy product?
That's a good question. I believe it would be the regulatory department. And I think Michael Bala is in charge of that. It's basically the people that are going to be coming out and reviewing your operations. Those are the people that you want to be aware of what's going on. So I think if you get in contact with them, you could basically tell them, hey, look, you know what, I've got a material destruction that I'm going to be claiming. I want you to be aware of it. And that way I would assume that, you know, from that correspondence, you maintain that, and that, you know, when you're subject to review, you bring that out and say, hey, I contacted so-and-so on this date, you know, and this is what was discussed. Everything was okay. You know, and then you're basically going to be allowed to have that. It's kind of, you know, one of those things where in this industry, don't ask for forgiveness. You got to ask for permission, right? Like it's one of those things where if you're asking for forgiveness, then you've been non-compliant. So they really want you to get the permissions first, right?
So this one's come up a lot about this destruction, and from my experience in my audit and talking to Michael Bala and everybody at the LDB, frankly, you're supposed to get permission every time you destroy. But the other option is to just have a good paper trail. And a good paper trail means you get your product destroyed, the packaged product I'm talking about, at a bonded destruction or recycling place, who will give you a certificate of destruction with the date and each SKU and the amount and what they destroyed, and those are completely acceptable. So what we've started doing, and what I've talked to a lot of other people who went through the audits, and the best practice is we have, so, and I'm talking about every 6-pack, every can that falls on the ground, every one that we need to destroy or just discount, goes onto a pallet in the corner of the warehouse, and when it gets high enough, we send it to our destruction place and get a letter of destruction for that amount of beer. And as far as dumping kegs, or which I'm sure we've all had to do this year, Michael Bala said video is fine. So we do a short video of this is this many kegs of this SKU, which were brewed from this batch at this date, and we'll be destroying. Then we do a short video of dumping 1 or 2 of the kegs, and he says that's acceptable. And we just save them on a Google Drive, on a Google file, and then when the time comes for our audit, I'll just share that file with them, and they'll be able to confirm any destruction we claim.
I'm wondering, just in the interest of time, Kristian, have you signed in as a member of the community as of yet? The online community? Oh, you're muted. Are we all muted?
No, I can hear you, Ken.
Oh, okay. Kristian, are you signed in on the online community? And if not, could you, because you are a member? And then these questions, those, if we didn't get to them, you could ask Kristian in there and he'd be able to deal with it. If that makes sense, if that's okay, Kristian? All right. Not sure why we lost your video or your sound.
Can I
And
ask
then,
this one real quick?
sorry, why I'm not, yeah, the other thing is, this is only the first step of this. We are going to, we basically are going to work with Kristian a lot, and we're going to tackle these kind of sections one at a time and do this through the online community. And you'll get plenty of notice that Kristian's going to come on and do this format for sure. Dawn, back to you.
Just somebody asking if we get damaged product back from GLS for third-party delivery programs, are they destroying this? Is there documentation that they should be sending to us? If they send it back to you, it's not considered destroyed. It's considered gone back into your sales bulk. So you need to destroy it yourself. So put it on your corner, your pallet in the corner of the thing, and do a quarterly destruction run. I suggest Blue Planet. Some of like Pacific Metal is very expensive. Blue Planet has just come into the market a couple of years ago, and I use them for destruction. It's significantly cheaper. But they're a recycling company that will recycle, and you send them a list of all your SKUs, and they'll give you a certificate of destruction.
Okay, we've got to, just in the interest of time, I'm sorry. If you want to ask your question, Kristian will go get out. We're going to send him an invite, and he can answer any questions there, or you can send them to me or Dawn or me, and I'll collect them, and then we'll get an answer for everybody and put something out. Kristian, thank you so much. Dawn, thanks for doing this. Really appreciate it. It's a lot of work to do. Back at noon. 8 minutes. 8 minutes.